highs? Will the Trump rally take us to new highs? Let's go to the Trading Nation team. Boris Schlossberg, BK Asset Management, Ari Wald with Oppenheimer. Boris, we spoke this morning on Squawk Box.
What did I tell you?
At that time, the futures indicated a lower open about 200+ points.
Right.
What's the message here?
And what did I tell you at that point? I said we're going to go too flat and we're probably going to rally. The message is market is seeing Trump as the growth president. I think this is the big takeaway today. You know, his message yesterday was spend, 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 increase demand. I think the market is seeing that very much, and the stocks are just being unleashed to record highs. And that's why bonds are also, that's why yields are also just spiking so much, because obviously I think he's going to juice the economy as much as possible. He wants to see 3.5%, maybe 4% GDP. So there'll be a massive spending, and that's going to help the economy to just grow very much faster than everybody thinks it will.
Because ultimately, Boris, stocks go up when, you know, earnings go up as well. Sales and revenue grow up. From what from what he said as a candidate, because he's obviously just the president-elect, are there things that he has said, or maybe it's the makeup of Congress, that make you convinced that either, you know, revenues and or earnings are going to go higher?
It's all about revenues, and it's really had to do with yesterday's acceptance speech, where basically he made a very, very Keynesian speech that he said, you know, the country is in trouble. We really need to spend a lot on infrastructure. And because he's got the Congress in his pocket right now, the single most important thing is he has all the power. I said this morning he's like the Godfather. Everybody has to kiss his ring right now in Congress. Nobody's going to stand in his way when he's going to increase spending maybe by twice what we're doing right now in terms of deficit. And that's going to really juice up the economy in the first half of next year.
Ari, we're looking at what could be the best week for stocks this year. In terms of record highs, we're going to go at it on the S&P 500?
Oh yeah, we think we're going at it. We've continued to view that we're going to make up new highs here into year end. I think the message from the charts, Melissa, here is that you want to own risk and buy risk. And really, if you even look at the 5% pullback we've had since August from that peak, it was very healthy consolidation. Investors were selling their safety stocks and accumulating more high beta and cyclical sectors. That was very healthy and positive signals underneath the surface. And now, along with this big overnight reversal that continued into the session today, we got industrials breaking out and transports breaking out, financials and the banks are breaking out.
Can we do this, though, Ari, without technology? Technology is what? The biggest sector on the S&P 500 right now. We've got some of the biggest components on that sector, in that sector, really having difficulty because in the past they have been targeted by Donald Trump. Amazon, Apple, Microsoft, they're all trading lower.
We're doing it with technology. Technology has been one of the standout leaders here over the past few months. The Q's just coming off the new all-time highs, really ahead of the overall tape. These are some of the strongest stocks in the market here, just simply not going up as much as some of these other names. They're fine. They're going to continue to work. Big breakouts in that sector as well. Technology's working. Energy's starting to turn the corner. It's all the right areas, Melissa. Yes, we think we are going higher, and those are all the sectors that are going to take us higher.
Well, we got a bullish view there on the overall stock market, fundamentally and technically. That's why we do it that way. Boris and Ari, thank you both very much.
Thanks,
folks,
guys.
for more Trading Nation, you can go to our website, tradingnation.cnbc.com.
Fluctuating commodity prices can impact more than just energy and material stocks. For example, lower oil prices might bring down transportation and packaging costs for many products and companies outside the energy complex. So when you invest in a particular sector or industry, keep a close eye on commodity prices and what they might mean for your investments.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.